Hello friends, this is Hatim Rampurawala, and in this video we will revise essay 210, the question bank of essay 210. The name of the essay is Agreeing to the Terms of an Audit Engagement. So there are in all 1, 2, 3, 4. So it will be quickly, much time because this is a simple. Agreeing to the terms of an audit engagement. Question number 5th. There is our first question. Mr. Ram Kapoor, a chartered accountant, has been appointed as the statutory auditor of XYZ Private Limited for the audit of their financial statement for the year ended 18-19. The company has mentioned in the audit term that they will not be able to provide an internal audit report to Mr. Ram. So Ram Kapoor was a chartered accountant, was appointed as the statutory auditor of XYZ Limited, and he had asked for the internal audit report, and the company had replied that they won't be able to provide the internal audit report to Mr. Ram during the course of an audit. Further, the company also imposed some limitation on the scope of Ram. So there were two things being done. The limitation being imposed on the overall scope of the Ram, that is they are statutory auditor, and they were not able to provide, so they will not actually provide the internal audit report. What is the precondition Mr. Ram should ensure before accepting or refusing the proposal? Also advise. So actually means Ram has been appointed as a statutory auditor. What are the preconditions Ram should ensure before accepting and refusing the proposal? Okay, what all are the preconditions before accepting audit itself? What are the preconditions which he needs to ensure that they are, whether that precondition exists or not? Also advise whether Ram Limited should accept the proposed audit engagement. Okay, so till now he haven't been appointed, so they have asked whether he should accept the proposed audit engagement. So precondition of an precondition for the audit engagement, I would like to say that this PDF is of CA Pankaj Gar, and this is been freely available on their Telegram channel, and and actually this PDF is copyrighted, and I am using this PDF just for educational purpose and not for any earning purpose, of course, uh, as this videos are not been monetized on YouTube, not monetized, of course. So we'll go through. I just what I can say, prefer to say this disclaimer in middle itself. Okay, precondition of an audit. So you would have got the question what they have said, that he is proposed to be appointed, and the limit imposed, and they are not providing the internal audit report. So whether Ram should accept the proposed audit engagement. So precondition of an audit engagement, SA 210, agreeing to the terms of an audit engagement, deals with the auditor's responsibility in agreeing the terms of an audit engagement with management. So this essay deals with his responsibility with agreeing to the terms of an audit engagement before accepting or refusing the audit engagement. To establish whether the precondition of an audit are present, the auditor shall precondition of an audit. Precondition, the auditor shall, this all are the precondition. First, determine whether the financial reporting framework to be applied in the preparation of the financial statement is acceptable. So first they have to ensure that the financial reporting framework is acceptable or not, applied in the preparation of the financial statement is acceptable. This is a precondition. Second, obtaining and agreeing to the management that acknowledges and understand its responsibility. So management should undertake its responsibility, they should acknowledge it and should understand its responsibility for the following four things. First, preparation of the financial statement as per FRF. Second, exercising necessary internal control to enable the preparation of the financial. There should be a proper internal control. First, that the financial statement should be prepared as per applicable FRF. Second, the financial statement, for the preparation of financial statement, they had to ensure that there is a proper internal control. They should enable a proper internal control that are free from material misstatement, whether due to fraud or error. And the third point is which they need to acknowledge and understand their responsibility is to provide the auditor with three things: access to all the relevant information such as records, documentation and other matter. Second, additional information. So first, access to all the documents. Second, additional information. And in third point they said unrestricted access to person within the entity from whom the auditor determine it necessary to obtain the audit evidence. Okay, actually this answer is not full complete, actually concluded anything over, because they had asked that, okay, they just asked, okay, there are two questions. If we see, what are the precondition Ram should ensure before accepting or refusing? So this with the one which we saw is the precondition, point A and in point B. In point B there are further 3 points. And the second question they have asked is also advise whether Ram Limited should accept the proposed audit engagement. So he need to simply ensure that if that limitations, that if the management is not providing internal audit report and limitation is being imposed on the auditor, uh, so and if that limitation will lead to the auditor, that is Ram, to express a disclaimer of opinion, so it would be better that Ram would withdraw, means Ram withdraws from the engagement, that is he should not accept the engagement. Over here actually the question is not properly drafted. The first they have stated that has that Ram, a chartered accountant, has been appointed as a statutory auditor. It has already been appointed, and whether they should accept the proposed engagement or not. So I think so the question is also actually not complete as such. So they are just left by giving the answer on the precondition. It is not the full answer. It's okay. We will pursue next question. AKJ Limited is a small sized 30-year old firm having a business of manufacturing of pipes. Okay, the company has a plant based out of Dehradun and have their corporate office in Delhi. Recently the company appointed a new firm of a chartered accountant as their statutory auditor. The statutory auditor wants to enter into an engagement letter with the company in respect of their services, but the management has contended that since the statutory audit is mandated by the law, engagement letter may not be required. What they state is, since the okay, since the statutory audit is mandated by law, engagement letter is not required. This statement is false. It is not that even if it is mandated, so engagement letter is not required. Before entering into an audit engagement with a client, auditor and the client enter into an engagement, audit engagement, proper engagement, and it has to be in a proper engagement letter. It has to be written in a proper engagement letter, and it has to be written. It can't be oral, of course. So this statement is wrong. That is the contention of the management is wrong. The auditor did not agree to this and have shared a format of the engagement letter with the management. Okay, for this, for their reference, before getting that signed. In this respect, management would like to understand that SA 200 auditing standard referred to by the auditor, if the agreed terms of the engagement, uh, wait a second, sorry. So I will read it again from this point. In this respect, the management would like to understand that as per SA 210 auditing standard referred to by the auditors, if the agreed terms of the engagement shall be recorded in an engagement letter or other suitable form of written agreement, what should be included in the terms of an agreed or engagement letter? So what are the contents? So basically exact question is there exists, what should be included in the terms of an agreed audit engagement letter? Uh, we will read out. Agree. So basically, what should be the content is the of scope, objective. So manage the individual responsibility, that is management's responsibility, auditor responsibility, then terms of an audit engagement, the other different terms of an audit engagement. So we'll read the answer. Agreeing on the audit engagement term as a 200, agreeing the terms of an audit engagement deals with an auditor's responsibility in agreeing the terms of the engagement with the management. So this essay says that it is the responsibility of an auditor to agree with the terms with management and appropriate those charged with governance. Okay, accordingly, first point, the auditor shall agree to the terms of an audit engagement with the management or TCWG as appropriate. So first they have simply said the that same thing again, that he has to auditor shall agree the terms of an audit engagement with that he should come to a conclusion, no, we can, it is not proper word, that he should come to proper certain terms, and based on that a proper engagement letter should be drafted. That is, auditor shall agree to the terms of an audit engagement with the management or TCWG as appropriate. Then second point, the agreed terms of an audit engagement shall be recorded in an engagement letter or other suitable form of written agreement, and shall include, as I said, that it has to be agreed, and it should be recorded in an engagement letter or other suitable form of written agreement. So it should be a written agreement basically, and a written agreement in which the terms would be have been written, and shall include first the objective and the scope of an audit of the financial statement. So what exactly the objective of that audit, and what is the scope given to the auditor for their conduct of an audit. So objective and the scope of an audit of financial statement. Second, responsibility of the auditor, responsibility of the management, identification of the applicable financial reporting framework for the preparation of the financial statement. Fourth point is identification of applicable financial means auditor has to identify the proper applicable financial reporting framework for the preparation of the financial statement. E point, reference to the expected form and content of an report to be issued by the auditor, and the statement that there may be a circumstances in which the report may differ from its expected form and content. A reference should be made that the report may differ, the form, content, layout of the report may differ from its expected form and content. That is okay, that it is simply the reference should be made that the content of the report to be issued by the auditor, and the statement that there may be a circumstances in which report may differ from its expected form and content, a little bit changes from the expected form and content, but that is okay. The main uh, that the main thing in that audit report, of course, is the opinion part, disclosure part, financial statement, uh, and actually report, it is opinion. So that auditor will give his opinion, but what they have stated is, if there is any there might be any change in layout or the presentation or the format from the expected or from what which have been agreed with the management. So it is done, it is clear actually. Now so third point, if the law and regulation prescribes, if in sufficient detail, the terms of an audit engagement referred above, the if the means if the law has given the format for the audit engagement, the auditor need not record them in writing agreement, except for the fact that such a law and regulation applies and that the management acknowledge and understand its responsibility. So if the law prescribes a sufficient detailed terms of an audit engagement, so it has the auditor need not have to record them again in writing. So though they don't have to again record them in writing, but the fact, except for the fact that such a law and regulation applies, that law and regulation applies while auditing, that is to the engagement and the auditors, that law and regulation applies, and the management undertakes its responsibility. Management should undertake the responsibility that it should acknowledge the one which is given in which is given as per the law, the one agreement which the law has prescribed. On that the management also have to agree, and on that the auditor also have to agree. Okay, so we'll again just go through what was the conclusion of the answer. So they had simply given a uh, whole case study, and okay, they simply given the whole case study and said that what should be the terms of an agreement engagement letter. So first point was that the that there should be an agreement, audit engagement with the auditor should that it is the auditor's responsibility in agreeing to the terms of an audit engagement. The first point, that auditor shall agree to the terms of an engagement with management and TCWG and uh, as appropriate. Okay, and in second point they state the content, that it should be in an audit engagement letter or any other suitable written form, and it should contain the scope and objective of the financial statement, responsibility of the auditor, responsibility of the management, identification of the applicable financial reporting framework for the preparation of financial statement, a reference to the expected form and content of report, in which that there may be a circumstances in which the report may differ from its expected form and content. Okay, and the third point is stated is, if the law and regulation prescribes the format, they can use that format, but the management should acknowledge and understand its responsibility, and the fact that the law and regulation applies to that circumstances. Okay, uh, next question, that is the third one. Comment on the following: it is not mandatory to send a new engagement letter in the recurring audit, but sometime it becomes mandatory to send a new letter, and explain those situations where new engagement letter is to be sent. So that said, okay, there are circumstances in which the terms of an audit engagement are revised, but they are not required to agree on and write it down in a new audit engagement. But there are some circumstances in which it becomes mandatory to send a new engagement letter itself. So we have to just explain the what all are the situations in which we require a new audit engagement letter. Second question, are in a company a chartered accountant have not revised the terms of an audit engagement and obtain confirmation from their client for the last 5 years? Means from last 5 years they were just doing the work from on the basis of the same letter of engagement. Despite a change in the business and the professional development, there has been a lot of change in the business model, professional development as well, but they haven't revised the letter of engagement. Please ejaculate the elucidate the circumstances that may warrant the revision. So what all are the circumstances, or what all are the cases in which there is a need, that is a mandatory need to revise the terms of an audit engagement? So we'll see the answer. It is simply a pointer answer in which there would be mentioned certain circumstances like change in ownership, change in key management personnel, change in the business size, nature, that are the cases. Situation in which the new engagement letter is required in case of recurring audit. SA 210, agreeing to the terms of an audit engagement, deals with an auditor's responsibility in agreeing the terms of an audit engagement with the management. It deals, simply said, that it deals with an agreeing to the terms with the management and TCWG. As per 210, in case of recurring audit, so if there is any recurring audit, the auditor shall assess whether the circumstances require the revision in terms of the audit engagement, and whether there is any need to remind the entity of the existing terms of an audit engagement. So if there is a recurring audit year after year, so they had to consider that whether there is any need to revise the audit engagement or send a properly new. So there are two cases, whether they need to revise, just revise, or to send a new terms of an audit engagement, uh, new, or whether there is any need to remind the entity of an existing terms of an engagement. Okay, there is a need to revise or remind the entity of the existing term. Okay, if there is any misunderstanding, for instance, okay, the decide auditor may decide not to send a new audit engagement letter or other written agreement such each period. However, the following factors may make it appropriate to revise the terms of the audit engagement or to remind the there is no need in general, they have said, if there is a recurring audit, but there are certain circumstances in which which make it appropriate to revise the terms of an audit engagement or to remind the entity of the existing terms of an audit engagement. So there are total 8 cases. First is an indication that the entity misunderstands the objective and the scope of an audit. So if there is any certain point, after certain point of time, if there is any case which indicates that the entity misunderstands the objective or the scope of an audit, so what in this case the auditor needs to do, either need to revise the engagement, or to remind the entity of the existing terms of an engagement. Second, any revised or a special terms of an engagement. So a new engagement objective has came, a revised special terms of an engagement. So for that basis they need to revise the existing term. Third, a recent change in senior management, a significant so third one was a recent change in senior management, top management, senior management, change in senior management. Then significant change in ownership, that is the shareholder control. The significant change in the nature and the size of the business. Seventh, sixth, a change in the legal and regulatory terms. Seventh, a change in the financial reporting framework adopted in the preparation of the financial statement. So if there is any change in the FRF adopted in preparation of financial statement, so that said, if there is a change in FRF, or if there is any change in legal law or regulatory requirement, or whether there is any change, or whether there has been a change in the senior management, change in ownership, change in spatial term, or whether there is any, or whether it appears that there are indications that the management has misunderstood the objective and the scope. And the last one is the change in other reporting requirements. uh, Change in other reporting requirements. So in this cases there is a need to revise the existing term, or to remind the entity of the existing terms of an audit engagement. So with this we are done with the third question also. And the last question of this essay is, X, a chartered accountant, was engaged by PQR company for auditing their accounts. Okay, X is a chartered accountant, was engaged by PQR company for auditing their accounts. He sent his letter of engagement to the board of directors, which was accepted by the company. Okay, he sent the letter of engagement and which was accepted by the company. In the course of an audit of the company, the auditor was unable to obtain an appropriate sufficient audit evidence regarding the receivables. The client requested for the change in the terms of an engagement. The auditor was unable to obtain sufficient appropriate audit evidence regarding the receivable. Okay, while conducting an audit, they had said that auditor was unable to obtain certain evidences regarding the receivable, and the client requested for the change in the term. And at that point they asked for the change in the terms of an audit engagement. Offer your comment in this regard. So if they are restricting, if the auditor is unable to obtain sufficient audit engagement, and client request for the change in terms of an audit engagement, so auditor need to assess that uh, change whether the change in the terms of an engagement is justifiable. And if yes, then they can agree on to the new or the revised engagement. But Means they can come to a new agreement. And if the auditor is not the what you can say, if an auditor do not is not justified with the explanation of the management for the revision of the for the change in the terms of an audit engagement, and if an management do not allows the auditor to work on the earlier terms of an audit engagement, auditor may either withdraw from the engagement and report it to the appropriate, if there is his responsibility, if he is responsible to report to the regulatory authority, he will do so, or a higher level authority. So we'll read the answer. Acceptance of the change in the terms of an engagement. Essay 210. Agreeing the terms of an audit engagement deals with an auditor's responsibility in the okay, sorry. Essay 210. Agreeing the terms of an engagement deals with the auditor's responsibility in agreeing the terms of an engagement, audit engagement with the management. So we had seen that this of the objective, in every start of an essay, the question, if the question relates to any essay, of that essay we have to write first the objective, what that essay states. Then as per essay 210, if prior to the completing of an audit engagement the auditor is requested to change the audit engagement to an engagement that conveys a lower level of assurance, auditor shall determine whether there is any reasonable justification for doing so. So he will verify whether there is any reasonable justification not for or not for doing so. Auditor shall not agree to the change in the terms of an audit engagement whether there is any no reasonable justification for doing so. He should not agree if there is no reasonable justification for doing so. Then third point, if the terms of an audit engagement are changed, the auditor and the management shall agree on to the agree on and record the new terms of an audit engagement in an engagement letter or other suitable form of a written agreement. So if the auditor is justified, and if by the explanation, and if they comes to and if he agrees, so they should come to they should record the new terms of an engagement in an engagement letter or any other suitable form of a written agreement. The auditor is unable to, if an auditor, okay, the earlier part we seen that if he agrees, so he will enter into a new engagement letter. And if the auditor is unable to agree to the change of the terms of an audit engagement and is not permitted by the management to continue the original audit engagement, the auditor shall so if he is not agreeing, and it is not, and he is not permitted by the management to continue the original one, the auditor shall do the following things. First, withdraw from the management from the audit engagement where possible under the applicable law and regulation, and determine whether there is any obligation, either contractual or otherwise, to report the circumstances to the other party, such as regulator. He should report, means he should withdraw, and it is any condition. And if there is any obligation or contractual or legal to, or otherwise, to report to the circumstances to the other party, such as TCWJ and owner, he should do so. So this we are done with essay 210. In next video we will revise essay 220. 220 probably is also the best essay. Thank you. And again I will say that this video, there isn't any earning motto, it is just for educational purpose, and this uh, PDF is copyrighted PDF of Pankaj Gar sir. Thank you.